signal here. A bullish signal can look like this.
Zev, if I may continue.
Again, this area, go for another long.
Thank you, Zev.
Okay. That's it.
Hello there, everyone. I'm very happy to have you all here because today we are discussing the U.S. core durable goods orders, which will be out in about 10 minutes. And as you can see, at the current moment, the forecast stands at minus 2.3%, whereas the prior figure stood at 2%, respectively. Yeah. So yes, we'll talk about the historical data a little bit more. Orders for long-lasting manufactured goods continued to improve in July, rising for the second consecutive month, and new orders edged up by 2% to 241.1 dollars, a 4.1% gain in June. Economists expected a fall of 0.4% in orders. Meanwhile, orders for manufactured goods, excluding transportation sector, gained 0.6%, $258 billion in July, after a downwardly revised increase of 0.6% in June. This positive release suggests continued growth in Q3. And durable is expected to contract 2%, while core orders are expected to gain 0.2%. I would now like to move on and share with you guys out there the Bloomberg survey summary, the survey of top economists from different financial institutions across the globe on their views on the U.S. for durable goods orders, of course. And according to their view, we have the Bloomberg survey summary where it stands at minus 2.3%. Average estimate stands at minus 2.2%. High estimate stands at 1.5%, and low estimate stands at minus 5%. Number of estimates this time has reached 79. And if we'll continue discussing the projections, I would like to quote James Picerno from CapitalSpectator.com. He's saying that yesterday's yearly look at the state of U.S. manufacturing in September offered a bit of encouragement. The flash data for the U.S. manufacturing PMI held steady at a moderately positive 53, although that the second month that the index was at a 22-month low. The fact that growth didn't weaken further offers a degree of support for expecting that the U.S. macro trend isn't deteriorating. It's certainly weak, or at least weaker relative to the second quarter, but the PMI figures suggest that the growth will endure, albeit at a comparative soft rate. Is that a reliable forecast? And today's hard data on durable goods orders for August may raise down. So Econoday.com consensus view sees orders slumping 2% in August, also reversing the previous month 2.2% increase, the first monthly decline in 4 months. But stripping out the volatile transport sector suggests a modest rise in orders. So perhaps weakness in the headline data will overstate the case for red ink. A bigger concern is the expectation that new orders will remain negative in year-over-year terms. The annual change has been in the red since February, and today's update is expected to break free of that gravity. Yesterday's PMI data implies that a modest tailwind is still blowing in the manufacturing sector, but today's release is on track to suggest that the modest momentum is getting weaker. And finally, I would like to show you guys out there Dukascopy community sentiment on the impact on U.S. dollar, Japanese yen currency pair. And according to that, we can see that our traders went rather bullish this time, 57.28, and we have a couple of comments from our traders. Yusuf is being bullish as it says that a continuation in the improved orders for long-lasting manufactured goods in July and a rising for the second consecutive month. And the positive release just continued growth in Q3. However, core orders are expected to gain 0.2, while he expects durable goods orders to contract, and he is bullish on the pair. Bash is saying that the initial, there are 4 indicators, at least, which would have immediate impact, and according to the mentioned above, he is bearish on dollar. And I truly believe that it's time for me to wrap up, because I would love to now invite Michael on the whiteboard to cover technical. Please.
Thank you, Paulina. Hello, everybody. So, today we've got the negative price trading strategy. To remind you, this is just one process strategy of what is going to happen today with today's quarterly goods orders data release. So, for the current release, I've chosen the euro-dollar currency pair, and the market sentiment for which is quite bullish, as 53.89% of all positions are long, while the US dollar is being sold in almost 53% of all cases, and the euro being bought in almost 52% of all cases. However, concerning the pending orders, you can see that both in the 50 and 100 pip range, the majority of them are to sell the euro. In the 50 pip range, it's 73.68%. And in the 100 pip range, it's 67.59%. Market sentiments of other market participants are also bearish, with around quite close to the neutral one, but still shifted to the bearish side at 50.72%. The Saxo group has almost 63% of short positions, and the daily FX has 61% of short positions. So that contradicts with our market sentiment. Moving to the market reaction table, where we can see the market reactions for the previous 5 data releases of the core durable goods orders. For the euro-dollar, the largest reaction was 48 pips in April, in the April's release, and the smallest one was only 13 pips in July. So, based on these reactions, we can calculate the average one, which is approximately 30 pips, and this is the average reaction we could expect in today's release. So, based on this reaction, we set the take profit and stop loss levels accordingly, and as you can see, the take profit level is located at 1.1269, which doesn't really have any other significant level to prevent the rally in case the data is released worse than expected or meets expectations. Maybe only the daily R2, which is located slightly higher, while the stop loss level is located at 1.1209, and we've got the 100 period simple moving average bolstering this level, as well as some other supports on the way, and even lower the major level and the 4-hour pivot point, which could also provide some resistance, some support, and preventing the pair from falling deeper in case data actually beats expectations to the upside. So we have just over a minute left, and I'll mention the technical indicators, which are giving us bullish signals in the 10-minute and the 30-minute time frame, neutral signals from the hourly to the daily time frame, also bullishness in the weekly one, and distinctly bearish at the monthly one. But the most important one is the 30-minute time frame, since the indicators were updated approximately 30 minutes specifically for the given day release. And they're actually giving us bullish signals, suggesting that the pair will stay, and that means that the data will probably be worse than expected. Also, I would like to mention from the Bloomberg survey other voters that predicted the current data release rather good in the so HSBC markets forecast a 0.6 So basically that they will remain unchanged or rise if you count the revised data to minus 0.4. And Standard Chartered Bank predicts a minus 0.4 decline, and Credit Suisse is also a minus 0.5 decline. So those two support the fact that we could see the euro rise today. And we should have the data posted to the chat any second now, with also probably the normal durable goods orders and employment rate, claims. So currently there is no reaction, so there is probably a delay in the core durable goods source, although the unemployment rate, the jobless claims, is slightly better than anticipated, 267,000. So it's worse than in the previous months, by 3,000, but 1,000 less than the anticipated 268,000. But as usual, the jobless claims doesn't really have a significant reaction, only from what we've seen around 10 pips. So the reaction should have the durable goods orders or the core durable goods orders. You can see the pair slightly rising to the upside, reaching only the 4-hour R2 and the 20-period simple moving average. So I'm guessing the data either met expectations or is slightly better, but insignificantly to have the rally that we anticipated. And yeah, we still don't have the big core durable goods data for some reason. So if anybody does, please post it in the chat. Although I see durable goods, it fell according to expectations to minus 2%, which leaves us only with the core durable goods orders, one we were focusing on. And it's actually worse than expected. It's 0%, so worse than by minus 0.2 percentage points worse than the forecast. So it basically remained flat. And hence we see a slight increase in the exchange rate, so but not enough from what anticipated. Only 11 pips the reaction to the upside. So that's kind of a disappointment, I guess, but I hope you guys had a good trade. Well, that's really nice, guess 94, although we already see the pair rising even more, so it's a 14 pip reaction. So I guess that sums up today's data, and back to you, Polina, to wrap everything up.
Thank you, Michael. And yeah, once again, to sum up, the U.S. durable goods orders came out at -2, and the core ones went at 0%. And by the way, yeah, nice to meet you, Siavash. We have noticed that you are constantly leaving a lot of comments in the community in your blog, and that's really nice to know that we have such loyal and active community members. Nice to meet you. I hope you'll stay for another webinar because it's time for Doc now to hit it on algo wars and growing inspiration, the victory dance. Thank you very much, meanwhile, and I'll see you very, very soon. Stay tuned because that will start in about now.
Ready for me? All those wonderful statistics. I understand when you strip out the food and energy, it came out to basically 0 in the end. So.